What's going on? So going to go through the currencies, indices, commodities today. So what I'm really looking at over here on the DXY, going through all of these, basically we can see the DXY has tapped into a low and we wick through it and then we start pushing higher. We've come in and somewhat tapped into areas of liquidity here, as we can see, but I'm not seeing anything majorly significant just yet. Obviously, if we are looking at it as a range high, we have these points here, which we could potentially be looking at. I just don't think that it's necessary for us to price those in just yet. I think what we could be looking at is this being the low. Even though we've tapped into it, we've moved up, and essentially what we've done is we've tapped into these areas and we're just basically see how price is responding. So as we go to the 4-hour, we can see that really the dominant trend is to the downside from the higher time frame, but on the ranging side of things, on the 4-hour and daily, we can see prices moving sideways. So for that reason alone, we can then kind of establish, if we are moving to the downside, where could we be responding to and where could we be looking to get positioned. And I think really and truly, if we look at how prices moved, what happened was we had this area here, we then pushed down, created continuation, retested it with some structure, and then we eventually sold off, correctively came in, tapped into the low, came over here. So the probability now is that we either make our way back up and we probably retap into those areas and then we actually get a potential sell-off. So keeping that in mind, even though we are looking at higher time frame shorts, we can potentially be looking at a short term to medium term long into the upside to see how this then eventually continues higher. So I'm not going to be trapped into the shorts based on the fact that this overall higher time frame is moving to the downside. We have to understand that we can come up to tap into liquidity before we do go short. So then, as we originally saw, we had a bit of liquidity there, but then the likelihood is we do have these points just above and we need to kind of establish, is that going to be the top of the range? So then if I go back to the daily, we can then see, okay, well, on the daily we do have a lot of room to come to the downside if we are ultimately moving into these lows. But we have to also understand that price can still hover sideways and create a larger continuation before we do that. So we might actually see sideways movement for a longer period of time and price just stays within this range for some time and then creates its continuation for whatever reason, and then we sell and we get something like that where you've got phase 1, phase 2, phase 3 pushing down, and then within that we have a little bit of consolidation there, and then we continue to move sharp, and over that period that could take a few weeks, even leading into a month. So for that reason, I wouldn't be jumping straight into some USD related trades just based on some lower time frame confirmation. I would really be waiting for some solid confirmation, and what I'm going to be looking for is really and truly like this whole section here. If I just map that back on, this whole section here is a piece of its own, but I think more than likely I am interested in this whole area as a such. So I would like to see price do whatever it needs to do, take as much time as it needs to take, but eventually make its way and come up into those areas and then see how price responds. If we get something clear like that, it's a no-brainer, I would take that as a short. But more than likely I would like to see some level of price just squeezing, makes its way higher, and next thing you know, we're in these areas here, and then we've kind of broken up, and then we just get a really decent sequence of trades to the downside, and that's basically what I'll be looking for. And that's where I could really get positions, on this overall move, and that's what I'll be looking for to then continue that for the sell. And then I think if you zoomed out on this, you would then see that this made enough sense. You'd be able to even make up some structure within it to then take the trade into that low. So then what we would be looking at ideally is, something like this, where then that becomes the base, price came up, expanded, didn't really have to come up to that liquidity point. It might, but it doesn't really need to. More than likely, we're retesting the bottom of this as well. And after that retest, we can basically see that. And I think that's solid in itself. It's interesting how that low essentially lines up with that high as well. So it gives us more confluence. I do like that a lot. And something is going on. Right. So that's basically it for the DXY. I do really like that trade thesis. As you can see, it does require a bit of patience. Now, if you were looking to take trades, obviously intraday, which makes sense because we're not going to wait till December, for example, to take a trade on the DXY related pairs, we would probably be looking at a base being formed for that continuation higher. Of course, there is the possibility we do come short because, you know, there's a lot of room within this overall range here where price can just do whatever it needs to do. But looking at the likelihood, we understand how price usually tends to move. Price tends to repeat itself. So what I will be looking at is for some sort of similar price action to what we saw before. And most likely we'll probably see something in the same lights of this. I wouldn't be surprised if, you know, we had something like that shape up. Something like that. And then we eventually make our way up. Something like this would make a lot of sense, I'll be honest with you, because it then just kind of gets a bit messy and then it goes, and then people are kind of just like, oh, I've missed the trade, and they start FOMOing and whatnot, and then towards the end it gets very corrective. You know, I've seen things like this many times, but again, obviously we can't tell the future. We're not future tellers here. We just have to trade what we get. So really and truly, I'm just going to be waiting patiently for price to reveal itself. If we can respond from a base, and I think where we are right now is a very valuable area. So if we can respond from these areas here, this will be interesting, because then I might see on the related pairs at this point here where, let's say this is failing, it pushes up, gives us a small consolidation here, and we can continue to go higher. And that's basically what I'll be looking for as well. So it would be basically, you're looking at that as a potential continuation, but it's on the low, and then it fails. What happens is it breaks out, gives us a small tight consolidation, and then it just goes. And then it's basically this trade here that actually makes the money, and not trying to get positioned in there. So that's basically what I'm going to be looking at for the DXY. I do want to see how we are responding and moving, but the longs are looking more valuable in my eyes right now than taking a short. However, we can still come and fill this. So if we do go sell for any reason and it just starts selling off, you know, continuation like that is a no-brainer. You'd basically take it into trade it, manage it into that area, and then take it as a more further continuation to see if we can trade it into that. Most likely, if we're going to fill that, we'll probably move a bit deeper and then maybe even come back eventually. But that's basically how I'll look at it. So it'll be that area there and that area there where I'll be looking to get positioned to then go short. And yeah, that looks pretty decent. I mean, as you can see, we are overall within this corrective sort of move to the downside, so it wouldn't make sense for it not to. But you can see that neutrality there that we're looking at. We either want to see price sell off and give us clear confirmation, or pull back and then kind of just give us that trade above here, where even at this point here, you can see that we didn't really create a second base. We just moved up, gave continuation, and carried on from there. And that would be perfect. And then at this high here, it's very manageable as well. I wouldn't be looking to get out my trade just there, but I would manage it accordingly. And then we'll basically be trading into this high. This high, because it lines up with that hook point, I think, you know, we could get some sort of pullback here where you'd want to survive that. But really and truly, I think we're probably going to smash through it, and we're probably going to see price just launch itself and make its way back up to these areas. Perhaps maybe what we might see, which we do get occasionally, which I think will be even better, is if we get a push up and then we stall here for a while and then eventually we move, because then what we kind of got is that impulse correction continuation, and then we've basically got it as a 1, 2, 3 to complete this overall structure, and then we can basically take the move to the downside, taking advantage of all of that. And I think that's something which I would much more prefer. However, I'm not really bothered too much, because once we get to those areas above, we can then evaluate carefully how we're going to respond and take advantage of this overall move to the downside. So that's basically it for the DXY. I mean, obviously, applying the same methodology and thought process to the counter-related pairs, you can basically trade it accordingly. So I was looking at Aussie CAD for a short. Didn't quite get it, didn't materialize. I was waiting for the insurance entry. I think this is a very interesting one, because you could have got caught out on a loss here as well if you took it as a risk entry. But for obvious reasons, because of that low, you would want to wait for the insurance entry. And that was basically it. It's only because it's sitting on that low. It's created two bottoms, yeah, but you could even argue it's a double bottom on that low to confirm even more that it's not going. So the only time I would have taken a risk entry here is similar to what we just spoke about. If we came up, we had a phase 1, phase 2, and then I could see that overall it was, exhausting in those areas. I could have then taken advantage of it, but we didn't get this sort of approach. In fact, all 1, 2, 3 into it, we basically just impulsed to it, stalled above. As you can see, that's kind of like that small tight consolidation. And then what happened was it sold off, retested, which is interesting over here. It then retested this and then eventually just went. So again, it's interesting because there was information in here where we could take advantage for the trades to the long after the failed continuation to the downside, which is good. However, again, we just didn't get that trade. I think now we're coming back up. It's very clear we're moving back to all-time most recent highs over here, so that would be interesting. I think if we look at it on the weekly as well, we can see that we clearly have a lot of room to move to the upside. With this overall move, it would make sense for this to either range in this area for a bit before we move higher to accumulate some volume, or if it has enough, which it looks like it does, it will just shoot and make its way up. So I was looking at potentially seeing if over here we spiked up, we came back in. I really like the size of these daily candles as well, where we had the push. After those strong candles, it made sense to have some level for pullback here. And then after I saw it kind of on the 4 hour, so after here we kind of retested this, sold off, broke, so that became a failed continuation. What I didn't really like about this was two things. So we had that as a failed continuation, we broke, we started trading below this area, which was nice. We started accumulating here. I could have got caught out on the 4 hour here as well. Again, it was just that one little piece of information there that kept me strict to stay out of it. But if you look at it on the hourly as well, with the heavy bodied candles and everything in place, it just was kind of more than enough for me to just want to take advantage of this. In isolation as well, it was pretty decent. Just move that. If you look at that as its own piece of structure, but the thing is as well, Ivy's mentioned this a few times, it's broken out. If it's broken out, just wait for the insurance entry. And I think again, this sort of thought process would have helped a lot. If you zoomed in too much, I'm sure you could have probably forced a trade, which would have been unnecessary. Yeah, like here, the simple insurance entry would have saved a lot of issues. Just wait for the simple continuation there, and then you would have at least had that confirmation of the accumulation for the next phase to move. But we didn't get that. You can see clearly that it didn't go. But this is an interesting pair when you do break it down, because you can see the psychology of what's actually happened. We basically had this, failed, then created that, failed, came back up, didn't quite even tap into that. This overall price action failed. We had the bit of liquidity there. It then traded below it. That was kind of more than enough for it to really just go. If we did get that, that probably would have been a monstrous move, and it would have just continued really just moving. But again, sometimes we don't get that. It's just a very interesting bit of price action where we can see it failed and just continued moving higher. But the interesting thing about this is, and it's something that I'm noticing now, is that when we do fail like this and we get those sort of moves to the upside, it just goes and recovers all the way back to these areas at least. So that's quite an interesting little piece of data. Aussie Swiss was another one I was looking at. So if I just go down to daily, what we can see here is on the daily we are essentially consolidating. So you can see that within all of this, it's becoming one piece of its own. Over there we basically had this squeeze that was one piece of its own, and then we had this bit of price action, again one piece of its own, and then this bit was within that. So when you do look at it, I don't know what's happening there. When you do look at it and you break it down and separate it, that was a bit of a squeeze to the upside, bit steep, and then it pushed down, came into its own little structure there, came down and then became this. You can see overall this is just one piece of larger correction. So keeping it boxed off like that, you do really have to be careful in these areas, because even though that you had this, and yeah, sure, this could really just continue and come back down there. That's possible, but at the same time, we don't even know if that's finished its move, and then if it's developing and it's not even, you know, done what it needs to do, and then it comes down and creates this, and then that evolves. These sort of things happen all the time, and that's why I think sometimes it's better to just wait for clear enough price action. For example, you know, if I just pick a random piece of data, like up here, you've got the value area, you've got the low, it's already established, price has done what it needs to, it's come into that area, and it's broken, it's created the continuation there. You take advantage here, price then breaks that low, you take advantage in those areas along this whole sequence, you know, and then countless times, even on this time frame in the daily, you can see, you know, we've had clear setups on those time frames, and then in the micro time frames within these moves, there's been a lot of trade setups as well. So that's a nice thing in itself. Like, you can take a lot of advantage off a lot of price action. It's just by understanding where and when you've got an advantage. And if you compare, you know, this section up here to this section down here, which one do you have more of an advantage in? And the truth is, you have this one. The difference is this stage here right now is basically here. So it hasn't really completed the overall pattern. We can only see, let's say, 30% of the pattern, whereas all it needs to do now is similar to what it did on the first one, is it needs to create that base. So once it comes down here, it creates the base, and then it starts making its way back up. You've then got this to play with down here, over here, and then it starts to make its way back up, comes up into those areas, and then when it's back up here, you've then got some data. And I think the interesting thing about it is it can basically become anything at this point. And when you see it like that, you realize that it's not worth having it on watch. Even if there is a small bit of percentage in there, I get it. It depends on the person. It's just, you know, a lot of the time you're asking for a short-term in and out trade. And here's a perfect example. It was something I was just monitoring, and that was the reason why I stayed out. But this is what I was looking at. So I noticed that we had this structure. We came in, tapped into those areas, were rejected, and then at this point here, we basically had the trade idea that, you know, we have that, and then it continues, it failed, it then created this sort of base, it's coming back up into those areas, and then we're going to sell, and then it's like, well, in terms of a move, there is enough liquidity here. So that's basically done what it needs to. That's come up and basically retested it. It's now sold off. This is one piece of its own. That's manageable into those lows at a minimum. And then if it continues going, great. And I've seen that time and time again. So in terms of the trade, okay, cool. The 4 hour close, let's just say we're looking at this trade here. 4 hour close wasn't really the best, honestly. You can see, you know, we had it there. But then if you go to the 1 hour and then you evaluate it, you're like, okay, well, if this is going to be our high right here, you can then see we've then responded, basically engulfed the body, and then we've rejected. And then it's like, okay, well, we either get tagged in now on this candle here, and then it continues going, or not. And then what happens is it just fails, and then you zoom out and you look at it and you're like, well, it's within all of this mess, so it's a bit of a difficult one anyway. So you're not really surprised that something like that happened. And at the end of the day, it's just one of those, I mean, don't get me wrong, this could have as well been a win, but the real question is, like, even if it was a win, there's still all these gaps up here where you can see from this point here, if I move that across, you've got all of these little gaps here. And I think when you've got all these gaps in place, it's also a clue that we're probably going to come back up and fill these areas. You know, we didn't tap into them. So odds are, what we tend to see at that point there is price will come in at some point and it will do its job. It will come in and fail at some point. So what better place to fail than on a continuation there, right? Where people are like, oh, we're going to go short. So you can see that when you do really look at it, you can see, well, the odds are, if this fails, where's it going? Well, it's going to go up here. So if I'm going to be wrong, well, it's going to take me out anyway. But in some scenarios, it's like, well, if I'm going to be wrong, it's not going to take me out completely. For example, let's say that you had a structure like this, and you had, 1, 2, 3, and let's say even here you had a consolidation, right? Just there. And let's say this high was a bit higher. Yeah, let's just say the high was here. That's your structure. You can see it's just whatever, right? It could be whatever in there. And then you've got that little bit of consolidation there. We know that if you put your stop loss up here, the odds are this is going to come up, tap into that, and then sell, and you're still protected. But in this particular scenario, where are you going to put your stop? You can't put, you put your stop there, you put your stop here, put your stop here, you're still not protected here. And that's basically what I mean by where the structure is positioned and the high time frame and the gaps. The gap for this one, like there could be gaps in here everywhere, in the middle here somewhere, but more than likely, even if it goes and fills the bigger gap above here, all of that section is still protected above it with a moderately decent stop loss, call it 20, right? Whereas in this situation, I'm almost certain stop loss is 10, yeah. So in order for me to even have stop loss up there, I'm not going to go with a 40 pip stop loss. It just makes no sense at all. So bear that in mind as well when you're taking these trades. You don't want to damage your risk reward too much, but also at the same time, it's like you have to accept, if I'm taking this trade and I'm wrong, then I'm taking the full loss, because it's very unlikely that if I'm wrong, it's gonna hover around and I'm gonna have time to get on break even or some profit. It's one of them ones where you realize what negative confluences are there in the trade prior to you getting into it. Even if you're looking at, oh yeah, but this could be a quick, 1.4 before I can manage it, blah, blah, blah. Well, okay, even though we've already wicked to it, but at this point here, it's a quick 1.4 profit, sure, but then at the same time, like, it's a quick loss. And if you start chasing it, it's more losses. So yeah, there's a time and place for everything, man. And I think, if you're going to really take it, yeah, you got to be proper sharp. You got to have everything in place. Like right now, don't get me wrong, I'm not favor of this, because after that push, we've just had this larger amount of accumulation. So I'd have to really see something. But in terms of looking for a trade, I don't see it being completely a crap trade. I just think that the best trade is probably this right now, because you're basically playing all that volume. You get it in there to go long, which is nice. Or let's say, for example, if this did sell and we just rapidly moved, if we got something here which was like that, it wouldn't be my best setup because we're still within all of that. But you're basically then playing the completion of this. We've then had volume come in over here, and then we've had the correction, and then we can then basically continue and play that further. But again, it's just way too large now. I think that's the clue that we're probably going to go long. It's just you've got to wait for that clear structure to present itself. Aussie New Zealand, I'm pretty sure this is going to be a long video. Aussie New Zealand's nice, to be honest. I would have liked to see a clear base be formed like this, but I'll quickly zoom out to the daily. As you can see, it is making its way higher. Sometimes it's relentless, sometimes it can just move. I'm not surprised though, because after all of that accumulation, it's ready to go. It's got enough liquidity in the market right now, volume to seek. People are going to be chasing this for shorts because, for whatever reason they see that, and then they're like, oh, okay. And then they draw this, and then they're like, oh, maybe there. And then what happens is, then you get the odd person who's like, okay, no, maybe up here, maybe there. And it's interesting because the market knows this, really and truly. The market knows exactly this, and it stalls. It stalls and gives you this confirmation bias, and you're like, I got the trend line correct. It was this, it was that. But really and truly, like, you're chasing something that doesn't need to be chased right now. It isn't a good thing. I'll be honest with you. There's a lot of things wrong with taking that as a short right now. I think what you need to be doing is you need to be looking at that value right there, because it's clearly moving towards something. So when you see market direction like this, you need to understand that the price isn't just pushing for no reason. It's moving to get somewhere. And as we just mentioned with what was it, Aussie Swiss and those gaps, what do we have here? Well, you know, we've got this gap here, we've got this massive gap up here. We're going to probably fill that. And I think knowing that and keeping that in mind, most likely what we're probably going to see is price will then start doing something like that, take its time, eventually get here, stall, and then probably sell off and make its way. Hopefully, maybe it might even just continue moving higher. But again, it's one of them ones now where if all these people who understand and they're pushing price higher have been buying, and they're buying all the way back up here, they're going to push it higher. But during this period here, what they're going to be doing, they're going to be getting out of their position. So when the buyers are getting out of their position and the shorts are coming in because they've got to sell off, what's going to happen is price is going to stall. It's going to get messy. It's going to start, you know, accumulating some sort of reversal. During that period, you still don't need to get involved because you'll get caught up in people trying to sell their longs and people trying to get short. And then at the same time, building more liquidity. So you don't want to be a part of that liquidity. What you want to wait for is price to really confirm itself. And what we might tend to see is a really interesting move here where we see these continuations and price just moves. Why? Because when you look at it, what's it actually done? Well, it's done this. And I can probably copy that over. 1 second, where is the tool? It's right here. So I take this, I move that, I put it over here. Right. Obviously this one was a bit more directional, but what you can see here is the exact same thing I'm talking about. It's basically done exactly what it needs to do. It's then now squeezing. Obviously the approach is different. In this scenario, the approach was quite corrective, but it doesn't not mean that we won't get that final approach in here. This is still corrective if you really think about it. It's just in a different angle. So as you can see on the orange one, what we've done is the exact same thing. We've then, in theory, had this. We've left a gap. We've then come in. We've then come up, came in, created a base, come back up correctively. In fact, this one is nicer, the orange one. Reason being is if I just move that lower, if I just draw this on, you know, how you've actually got there is also interesting. You know, I mean, that's the crazy thing. This is on the weekly, so, you know, you can see once these things have completed, the earning potential. Look at all that on that sell. You know, obviously it took some time, took probably a few years, but imagine you're in these trades, you're able to just keep getting involved, and you're able to take advantage of that. I think that's what's coming after this completion of the range. We're either going to see two things. We either start rapidly moving to the upside, which I'm not really against, because it goes into similar what we were just talking about, that people are going to be looking up here for shorts, and then what happens is it accumulates, and then boom, it just continues moving. And then what happens is we have this massive run back to the upside to what? To fill those gaps. Interesting price action, because it's not usual that we get this large correction into another correction right here for it then to continue to then give you another correction. It becomes a part of this, but I think even it becoming a part of that, I do like the idea of even that being this, and then that comes up and still taps into those areas here, and we still can take advantage of all of that. So I'm really for an Aussie New Zealand long, and yeah, just wanted to point that out. So, you know, if that's why I'm kind of looking for them really structured trades on there as well, because on the 4 hour, if you look at it closely over here, what you can see here is prices is moving pretty decent. It's not giving the best cleanest entries, but it is got a decent run in it. So you can see here that channel broke above, we then squeezed. Even the nature of how prices move in there is interesting, because it's not giving you those clear flat flags, it's giving you these very angled running channels. So it's like more in the sense of even though it's correcting in the direction of the trend, which I do like as well. We're seeing that time and time again, but again, I'm still waiting for clear trade setups. I think when you get these, what I've noticed is when you get these trends where prices move in directional like that, there's still a lot of trading opportunity, but it's giving you an indication that price is very bullish, and it's definitely moving somewhere, and it's trying to get there pretty fast, to be fair. But right now it's one of them ones where if from here to here it's not really much, because we're looking at about 200 pips. So at the end of the day, it can get messy as you approach those areas, just due to profit taking. You see that wick as well. You probably see a lot more of those, and you'll notice that if you go off and you look at the low down here, you can see as we started approaching this low, for example, I don't know what that's marked on, but as we started approaching this low, you can see all that wicking. You're trying to get in there for a short, and then what happens is spikes up, takes you out, goes back up, randomly retests, creates this structure, continues, fills that wick, comes back up. Like, all of this is a part of profit taking. This is all profit taking. And then what happens is price starts to push higher, and then people start really getting involved, and price just continues going. Real buyers started coming in here, and it's interesting because it starts to convince you that this could potentially be a short. And what better place to do it, where people are thinking, let's go short on the structure, they're misreading everything, and then they're missing the long. And this is what I've noticed time and time again. There's so much clues there. So Aussie yen is an interesting one too. I think I'll get through the Aussie pairs and I'll make another video at a different point, because definitely went on, but there's a lot of gems in here as well. So Aussie yen, very interesting pair in itself as well. I think this still needs time to consolidate. I think, yeah, it needs a lot of time. You can see here, base, it's within this range. You wouldn't want to just get caught up in something like that. Don't get me wrong, I think even if I went to the hourly and I looked at this a bit closer, it does look like this could be moving from push up, consolidation, push up, and it goes. That makes sense. I'm not a huge fan of this, to be honest. It's just very messy, very liquid. And let's go Aussie US dollar, last one. Aussie US dollar. Interesting. So what we can see here, what I do like a lot, is on the daily, even though we've tapped into that bit of liquidity there, which is obviously by no means anything majorly significant, but we tapped into that, we rejected. But at this point here, we're kind of failing to continue. So as we see that failing and we measure it up, we can see, okay, it's come back and retested around about 50%. At this point here, this is where we're going to really get a message from the market. We either respond to this and it becomes a bit more of a tap into that and sell off, or we'll go to the hourly at this point, we do something a little bit more interesting, where we kind of just come in here and then it fails, and then we get something in the lines of a continuation here, and then it just goes long, and then that's the clear message from the market. Other one is we basically push and we get the continuation down here, and we can continue moving, and then we basically take advantage of all of these additional continuations. It's a bit of a win-win situation. I mean, it's done more than enough for it to give us a decent sell for now, and it's done more than enough for it to go long. So I'm not really too fixated on Aussie US dollar. I think that's the level of neutrality that's needed. We can see that obviously if I go back to the daily or even the weekly, you can see on the weekly candle as well, like it was looking very solid. I'm just going to clean this off. It was sorry, I've just got too many lines. There we go. It was looking really good at that point there where we rejected. And then I think with it stalling now at this point here, this is where I would be a little bit more cautious, because we are within a squeeze. We are within this. And I think understanding that is half the battle at this point, because really and truly, there's no guarantee for any trade to really commit. it could just keep doing this for quite some time to make its way all the way back up there. And then what happens is you're trying to short, and what happens is it just keeps moving. So I would be very cautious with something like that. I think the DXY is the one that's going to really give us the message. I would really be interested in this if, for example, if we came back up, we created a base, and then we started seeing continuation, and then we started creating something larger to like give us something like that. I wouldn't mind that. I mean, obviously this is the weekly, so you know that's just basically probably not going to be the case. But on the daily, again, we could be waiting and seeing something. Like I said, it's just one of them ones where it could be going up and down, up and down, up and down, and then you're sitting in there waiting for Aussie US dollar, and then you know it's not really giving you the clearest price action. I mean, in comparison to something like an Euro USD, you can see how Euro USD is moving in comparison, and then you can easily see like I would much rather wait for something in correlation with Euro USD, where if that shaped up, at least it's not within a squeeze. For example, let's just say it did this, came down, confirmed the base, came up here and gave you insurance entry, and you took that. Yeah, sure, I mean that's not the worst trade in the world, because even though it did this and responded to the base, then you have argument for an evolved structure where potentially we're now looking at something like this, right? And then it's like, well, position wise, I've got positioned in the long here. That makes sense because it's going to continue and tap into even a 3-touch there. So I would much prefer something like that in comparison to Aussie US dollar. I just think with Aussie US dollar, even if I had the same structure, it's tricky because at every point you'd be drawing this, which wasn't wrong, and then you're thinking, okay, I'll evolve it, and then what if I got something like this, and then that doesn't really make sense. Then you're like, okay, what if I do it like this, and you just keep going on and on and on, and it's like, I think we were looking at another pair earlier where you could just keep drawing it and drawing it and drawing it. I think it was the first pair we were looking at, Aussie Swiss or Aussie CAD. You keep drawing it and you don't know the angle, and then eventually you're like, oh, this could be the angle, and then you're like, right, okay, this was the angle. But how many angles you have to go through? It's just the data's not clear enough for you to then take advantage of it, so you keep drawing different variations where, in fact, the best thing to do is not overthink it. Don't overthink these angles just because, you know, price is stalling in an area or something. You could just literally just say, okay, well, this point to this point, that was the angle. It didn't respond to it. It then pushed up higher. Where's it going? It's going to this point here. Okay, great. So what I'm going to do is just wait for price to get there, and then we'll see what happens, or take advantage of price getting there, which I think is a smart move. And yeah, that's basically it. So yeah, I hope this video was useful. Hope there was some little gems in there that really helped you get a good eyesight on position and sequence entry. But really and truly, you can see how the level of pattern separation and just understand the nature theory on each pair can really help you move forward. And I think that's something that really helped me. So guys, I'll catch you in the next one. Hope that was valuable, and yeah, take care.